Hello friends, welcome to Easy Learning Economics. This is Dr. Carroll. Today we are going to learn about inflation and its causes. In this lecture we shall discuss that what is deflation and its causes, what is disinflation, what is the inflation rate, what is the consumer price index CPI and WPI, the wholesale price index. So in this lecture we shall discuss the inflation and all the relevant concepts. So what is inflation? Inflation means a persistent rise in the general level of price. When the general price level rises, the purchasing power decreases and our currency buys fewer goods and services and the cost of living in the country increases. Like price of many consumer goods have been doubled in 2 decades. Increase in the price level leads producer towards the high profit, and the producer produce more and unemployment decreases. What are the causes behind inflation? Inflation can occur due to increase in the cost of production, like rise in the price of raw material, wages, or increase in interest rate. Inflation can be due to increase in the demand for a product. What is deflation? Deflation means a sustained decrease in the average price level. Is observed in the Great Depression in the USA in 1929 when stock market crashed. Purchasing power increases due to deflation and our currency buys more goods and services and cost of living in the country decreases. The lower prices bring lower profit to producer and producer produce less and lay off the workers. As a result, unemployment increases. What are the causes behind the deflation? Deflation can occur due to decrease in money supply or increase in productivity and increase in technological progress. What is disinflation? Disinflation is a rate of decrease in the general level of price, or disinflation is a decrease in the increased rate of inflation and price level slows down from the previous period. It means the price inflation slows down temporarily and inflation rate declines over time but remains positive. For example, if the annual inflation rate for the month of January is 6% and it is 5% in the month of February and 4% in the month of March, the price is disinflated by 1% but are still increasing at 5% and 4% annual rate, and it means the inflation occurs but the speed of inflation decreases. What is inflation rate? A number showing variation in the price level compared with the price value in the previous period, often represented by 100 and called the changes in the index number. Can be expressed as percent changes either monthly or annually, called the inflation rate. For example, if the price of certain commodity rises from $10 in the year 2007 to $15 in the year 2017, the price index number will be 150, showing that there is a 50% increase in the prices over this period. So inflation rate means the percentage change in consumer price index over the reference period. Here is a formula for calculating the inflation rate. The formula for inflation rate is CPI 2 minus CPI 1 divided by CPI 1 multiplied by 100. Here you can see that CPI 2 means price in the current year. The CPI 1 means the price in the base year. Current year price minus base year price divided by base year price multiplied by 100 calculate the inflation rate. Using the example data in the formula, we calculate inflation rate. This is the CPI 2, this is the CPI 1. So 15 minus 10 divided by 10, that is CPI 1 multiplied by 100, and after solving it, that the inflation rate that has been calculated is 50%. It means there is a 50% increase in prices over this period. What is CPI? CPI stands for the Consumer Price Index. It is also known as Retail Price Index. CPI is a measure of the cost of fixed market basket of consumer goods and services purchased by the household. What is fixed market basket of consumer goods? The fixed set of consumer products including goods and services whose price is monitored regularly, monthly or annually. A large rise in CPI during short period of time denotes the inflation period, and large drop in CPI during short period of time marks the period of deflation. Inflation reduces the confidence over the long run in the value of dollar. Changes in CPI are used to observe the changes in price level associated with cost of living. The CPI is released on monthly basis from Central Statistics Office, Ministry of Statistics and Program Implementation. CPI includes 460 items of 8 categories of product. What are those items? Transportation, beverages, apparel, education, communication, recreation, food, housing and medical care. The calendar year is used as base year in CPI, and it is important to general public. It means the CPI provides information about price changes to nation, government, business, labor and private citizens, and CPI is the indicator of effectiveness of the government economic policies. CPI, the Consumer Price Index, the measure of inflation, is widely used by 157 countries including Pakistan. The other measure of inflation is WPI, means the Wholesale Price Index. Consumer Price Index and Wholesale Price Index are used to measure the changes in price of goods and services. The Wholesale Price Index measures the changes in price of 697 primary goods like fuel, power and manufacturing goods only charged by the wholesaler. Wholesale Price Index WPI is released and published on weekly basis from the Office of the Economic Advisor, Ministry of Commerce and Industry. Financial year is used as a base year to measure the inflation in the first stage. WPI, it means the Wholesale Price Index, is used by few countries like India. In this lecture we learned that what is inflation. If we summarize, we can say that inflation means the persistent rise in general level of price. What is deflation? Deflation means the persistent decrease in general level of price. What is disinflation? Disinflation means decrease in the annual rate of increase in inflation is called disinflation. So what is CPI? CPI means the Consumer Price Index, that is also known as Retail Price Index, that is shows the changes in price level with reference to a base year. And what is the Wholesale Price Index? Wholesale Price Index is used to measure the changes in price of goods and services. So it is all about the inflation. I hope that you understand more about inflation and various concepts. If you have any queries or suggestions, let me know in comment box. Thanks for watching.